ended. Welcome everyone to another episode of Prideful Narrative. I'm your host Muakel, he, him, and we share amazing and inspiring stories from members of the 2S LGBTQI plus community. Despite all the hardships and obstacles we face, we always find a way to be resilient and to succeed. And today's guest is another success story who's doing accomplishments, and I had the pleasure to connect with him through the power of social media. And then I saw his profile. I was very inspired. I did reach out to him, ask him to meet. And during our first meeting, I was so motivated by him and his knowledge and about his story, how he transitioned from being a well-established chef and very well known in the food industry to now he's a mortgage agent, level one. And for a very short time, he learned a lot. He helped a lot of clients to save time, save money, and fulfill their dreams of buying their first home. So without further ado, please help me welcome our special guest, Luis Enrique Arenas Herrera.
As you were saying, your profile also inspired me, and I see what you do. So I kind of decide to participate on the podcast. So thank you so much for having me here. It will be a great episode.
Of course, thank you so much for coming. And I know it takes a lot of time and you're a very busy person, but I do appreciate your presence with us.
Thank you.
Okay, so I'm gonna head to the first question. So, what made you transition between your career, knowing that you were a well-established chef, and now you're more interested in the mortgage industry?
Yeah, so I've been always interested on real estate and all the finances. Back home, I did some studies on finances and
Mm-hmm.
IT, and that was one of the things that inspired me here in Toronto. When I came in, the buildings are awesome. They're beautiful. Living downtown give me that sense of belonging to the real estate world, and that's kind of why it inspired me to transition. The reason why I decided to be a mortgage broker, I'm not a realtor, it's because I feel that everyone can say, I know a realtor, I know a realtor, I know a realtor, and they can show you houses. But how many of us can say, I know someone that could help you with your mortgage? Someone that can teach you and add value to the little or all the knowledge you have, right? So that was something that inspired me. And coming from a different country, there is a lot of people that doesn't have that knowledge, right? So I kind of got inspired to provide that knowledge to whoever is around me and whoever is transitioning to buying their first home.
Thank you so much. I know we discussed that previously in our first
Mhm.
meeting, and I was so inspired because it's such a shift from one career
Yeah.
into another. But still, you're very passionate. You've helped a lot of people, and you know how to find the best mortgage rates and how to save a lot of money. And
Mhm.
I believe you work with BRX Mortgage.
Correct.
So I also Googled it and I was seeing all the positive reviews about
Mhm.
it. So just guide us about your journey. If someone wanna become a mortgage agent, what is the education or the licenses or the training that you need to do?
So I actually thought it was going to be more hard to become a mortgage agent. It's actually very simple. You just need to take the test. Of course, you need to study. In my case, I was as a chef. I was very busy,
Mm-hmm.
so the training was 50 or 60 hours, and it took me over 2 months to complete it.
Mm-hmm.
But some of the audience, if they're like on a part-time basis or they're not working currently, they could just finish it in like 2 weeks, 3 weeks. Um, a big piece of advice that I didn't do properly was to read the book and watch the training videos online.
Mm-hmm.
I was more focusing on the online
Mm-hmm.
part of the course.
Mm-hmm.
And when I took the test, I was like, wow, I didn't see all of this on the video, but common sense,
Mm-hmm.
I was able to fill it up, right? So it's actually very simple. I do encourage a lot of people to even do it part time,
Mm-hmm.
right? Just to kind of get the knowledge of the industry,
Mm-hmm.
right? And how we can help all our community.
That's amazing that within only 2 months you were able to learn a lot of the knowledge in the industry,
Yeah.
the the ups and downs, and the like how to network and find like
Mhm.
the best rates for the mortgage that sometimes the bank will not have or might have like higher rates, higher interest. So you know how to find ways to save money. So let's say I'm someone who wanna like buy my first home. Who is the first person I should contact? Is it a realtor? Is it someone like you, a mortgage broker? Should I talk to the bank, to the lawyer? Imagine I don't know anything about it. Can you
Mhm.
guide me through this like procedure?
Yeah, so if I need to guide you, I will suggest you to contact a mortgage broker first or to your bank. It's better to contact a mortgage broker. We have more access to different products that sometimes your bank doesn't.
Mm-hmm.
And I will get more in detail later on the episode. But most of the people out there, they just go and start looking houses, right? Like house hunting. What do I want? I want this. And people start making plans. Okay, I'm gonna put this lamp over here, this furniture there. I'm going to do some renovations here and there, whatever. But they don't actually know how much they can afford, right? So I believe that in your case, if you want to purchase a home nowadays, you should be able to say confidently to your realtor, this is my budget, right? So the first point of contact will be a mortgage broker. That will be first. Then based on your actual budget, we can contact you with the realtor, who is the person who is going to show you the property. Everything else will guide you through the journey of purchasing the home. You will have to contact a lawyer. You will need an insurance for the home.
Mm-hmm.
Depending on the finances, if you're looking to buy with 5%, 10%, whatever is under 20%,
Mm-hmm.
you might need, well, actually, you need insurance
Mm-hmm.
for the mortgage, right? So, first point, it will be know your budget.
Okay. So this is very helpful, and it's also a time saver to know that a mortgage broker would be the first contact person.
Yeah.
It will save you a lot of time, a lot of money if you find the right resources, the right person to
Mhm.
help you find the best rates. So perhaps can you also explain the difference between pre-approved and pre-qualified mortgage?
Yeah, so the pre-qualify, we can do it on the spot, is something that is based on the snapshot of your finances that you currently remember at that given time. It doesn't um, touch your credit score, which is something that we need to avoid when we decide to purchase a home. You don't want too many inquiries on your credit score. Being pre-qualified doesn't guarantee that you will get pre-approved,
Mm-hmm.
right? It's just a quick snapshot of I could afford a home of 500,000, 600,000, and so on. When we get you pre-approved, it means that an specialist on mortgage already checked your finances. We do a soft credit check,
Mm-hmm.
and that will give us actually exactly how much you can afford.
Mm-hmm.
And then based on that, we contact the lenders and we do some negotiations on your behalf, keeping the best interest for you. So is the lender. We are impartials on those
Mm-hmm.
negotiations, and we just close the deal. So that's pretty much it. The difference between being pre-qualified
Mm-hmm.
and pre-approved. The fact that we are pre-approved, it doesn't mean that you already have the house.
Mm-hmm.
Okay, when we pre-approve you, you also need to have in consideration that when we're closing the deal, the
Mm-hmm.
lender will it might require you to give the last 30 days
Mm-hmm.
of financial statement,
Mm-hmm.
right? So that means if you do a major purchase because you're excited to buy the furniture for your house, and then you don't have enough money in your bank account at the time of the close, the lender might say no.
Mm-hmm.
right? So that's something that people also need to take in consideration. Don't do any major purchase.
Mm-hmm.
Don't change your car after you're pre-approved. Don't buy $10,000 furniture,
Mm-hmm.
RPs, or anything because that might affect the closing of the house,
Mm-hmm.
right? So we recommend purchase everything after it's closed.
That's a very useful tip,
Yeah.
even for me personally. I do appreciate it. And it does sound like you play a very crucial role being the middle person between
Yes.
the lender and the client, and you have to manage both, to
Hmm.
sustain good relationship with both of them. But that's your job, and you're
Yeah.
excelling in it. So,
Yeah.
and you did mention about the credit score.
Hmm.
Perhaps can you share some financial tips on how people in general can increase their credit score?
Yeah, of course. So purchasing a home is not something that people might wake up today and say, wow, what a great day to buy a house,
Mm-hmm.
right? So it requires a little bit of preparation. And one of those is the credit score. So the higher credit score we have for with the client, more benefits we could get or better interest
Mm-hmm.
rate we could
Mm-hmm.
get from the lenders. Um, and one of the biggest piece of advice is don't ever spend more than 30% of your credit card
Mm-hmm.
if you're
Mm-hmm.
not going to pay it in full. If you're someone that every month pay the credit card in full, go
Mm-hmm.
on,
Mm-hmm.
right? So that will actually give you more credit score.
Mm-hmm.
Um, don't do major purchases before requesting the loan.
Mm-hmm.
Don't change your car. If you purchase a car, try to buy a house like 2 years after, so that that credit history it shows that you are not constantly living on mortgages
Mm-hmm.
or loans,
Mm-hmm.
right? So the lender want to make sure that you have the money
Mm-hmm.
to live and you know how to manage your credit,
Mm-hmm.
not the credit score, your credit,
Mm-hmm.
right? So it's being cautious about your expenses and, of course, building your saving account or
Mm-hmm.
TFSA
Mm-hmm.
or RRSP for the down payment
Mm-hmm.
is
Mm-hmm.
important to keep up with the high score.
Mm-hmm. I think I heard you mention something very important about not using more than 30% of
Hmm.
your credit card limit. So let's say someone has $10,000 limit on their credit card,
Hmm.
not use more than 3,000 per month.
Correct.
And to also, if they utilize to pay it back each month, not have like any money accumulating as more and more interest will be
Correct.
on that amount, and it
Yeah.
might eventually
Yeah.
lower the credit score.
Hmm.
Thank you for the tips.
Yeah.
Perhaps now you can also tell us the difference between fixed mortgage rate and the variable mortgage rate.
Yeah, absolutely. So a fixed mortgage rate is for someone that wants to have that peace of mind that they only gonna pay certain amount of money
Mm-hmm.
and they can budget their monthly expenses a
Mm-hmm.
little better. I actually like a little bit the freedom of the variable. Both of them have their pros and cons. One of the pros for the fix is you already know how much you're paying,
Mm-hmm.
right? Usually the fixed rate comes with a little bit higher interest rate,
Mm-hmm.
while the variable it might be a little lower,
Mm-hmm.
but it depending on the economy at that given time, the payment would be a little over
Mm-hmm.
the interest rate or a little lower. So being smart a little bit, I will say on my preference, and I'm not giving any advice,
Mm-hmm.
this is just my preference, I will say variable,
Mm-hmm.
right? It gives you that option to give an extra payment every month, every
Mm-hmm.
3 months,
Mm-hmm.
so the length of the loan it gets reduced, right?
Mm-hmm.
So if we give like one payment or two extra payments a year, that will reduce our amortization period.
Mm-hmm.
So I feel that being smart a little bit in order to reinvest and gain more profit out of my property, I will suggest variable.
Mm-hmm.
But yeah, so they both have pros and cons.
You did mention mortgage amortization. Can you
Mhm.
tell us more about it and how does it impact the monthly payments?
Yeah, so the amortization is the length of the mortgage, right? So usually in Canada is between 25 and now we can choose 30 years. There are some other options, but there are private loans, but I don't want to get too much into that because we could pick even 40 years.
Mm-hmm.
But of course, the interest rate is more high than what we
Mm-hmm.
actually know in the market. But just being a little bit more conservative, it will be between 25 to 30 years.
Mm-hmm.
So let's say, for example, we have $500,000 loan at 4%.
Mm-hmm.
This is just an example. And the amortization period is 25 years. That monthly payment will be around 2,400.
Mm-hmm.
If we do the same numbers, 500,000, 4%, but over 30 years amortization, it will be about 2,100,
Mm-hmm.
right? So that gave a little bit of
Flexible.
room
Mm-hmm.
and flexibility to the monthly payment.
Mm-hmm.
Let's call it like that. Of course, the fact that we extend those 5 years,
Mm-hmm.
it means that yes, there are 4%, but the longer the mortgage is, it will be more tax or more
Mm-hmm.
interest
Mm-hmm.
expensive,
So
right?
if I hear you well, it's better to pay faster than to accumulate more and more interest that is money you're losing anyway.
Yes, correct,
Okay, okay.
correct.
That's an amazing advice. Many people get
Yeah,
confused about it. They think, oh, I have like more years, I'll pay slowly. But the longer run, you're losing more and more
you're
money.
losing more and more money. Yeah,
Yeah,
correct.
yeah. Okay, can you tell us what is a recommended down payment? Like how much should we cover from the home cost? Is it like
Mhm.
10%, 20%, 30%? What is the recommended down payment?
Um, Conservative size is 20% down payment.
Mm-hmm,
That will be what the bank expect
mm-hmm,
from you.
mm-hmm,
20% down payment, we will do a mortgage for the other 80%. We're
mm-hmm,
fine.
mm-hmm,
The mortgage brokers, mortgage agents, just like me, we have access to a different lenders that
mm-hmm,
they're open to negotiate the down payment.
mm-hmm,
You could buy a house with 5% down payment. You could do 15%. It depends on your finances.
mm-hmm,
But the only condition is whatever is under 20%,
mm-hmm.
it needs to be on insurance. So
I
if you
see.
want to buy a house with only 5%,
Mm-hmm,
everything else needs to be on an insurance
mm-hmm.
because we need to protect our lenders,
Of course,
right?
it's
So we need to,
understandable.
yeah. So, and that is mandatory. That
Mm-hmm,
is something extra that you will need to pay. The cost of that insurance could be added to your mortgage payment. It's not that you need the 5% and the insurance.
mm-hmm,
No, that insurance cost, it could be added to your mortgage and then of course the monthly payment.
mm-hmm, mm-hmm. Okay, and uh, can you tell us more about the closing cost and how buyers should budget for that?
Yeah, absolutely. So with my clients, I like to let them be aware of the closing cost.
Mm-hmm,
It will be all the taxes, the lawyers, the home inspection, just those little details that we need and are required
mm-hmm,
to close the mortgage
mm-hmm,
transaction. Not all of them or not all of the lenders might require a home inspection
mm-hmm,
or just a simple home inspection. There are different type of, so it could range from 300 to 1,000. It depends on the property, it depends on the
mm-hmm,
type of inspection the lender is asking
mm-hmm,
the clients to have, right? So I like to average between 1.5 to 2%
Mm-hmm.
just to be on the extra side,
Okay.
right? So the lenders will also check if you are financially stable enough
Mm-hmm.
to pay those. You could have your down payment, but if you don't have that extra closing cost, the deal might just fall
Mm-hmm.
apart at the very end.
I see. So to be safe, have some money set aside for the closing costs that you
Yeah,
mentioned. 1.52% from the total mortgage or from the
from the
house?
house,
From the house.
from the
Okay. Okay.
house price.
Okay. So it's good for all of you to be
Yeah,
aware that to have 1.5 to 2% save just in case there are like some hidden costs that you need to be aware of.
yeah. And if we don't use the entire 2%
Mm-hmm.
that we have set aside for the closing costs,
Mm-hmm.
then that's when I suggest the clients to start buying furniture.
Mm-hmm.
The deal is
Mm-hmm.
closed. We didn't use that 2%.
Mm-hmm.
Okay, let's party out with the money.
Mm-hmm.
Furniture, repaint, anything
Mm-hmm. Mm-hmm.
after the deal is closed.
And let's say I want to buy my first house. I'm a first time home buyer. Are there like any government incentives? I did hear about some programs that are helping.
Mhm.
So can you tell us more about these programs or what's available now?
Yeah, so since 2023, if I'm not wrong, there is a new saving account for first-time home
Mm-hmm.
buyers that actually is fantastic.
Mm-hmm.
It's like a mix between an RSP and a TFSA.
Mm-hmm.
So it helps you to grow the money while it's being saved. And
Mm-hmm.
at the moment that you're taking the money out, you don't have to pay as much taxes,
Mm-hmm.
um, or you don't have to repay it back.
Mm-hmm.
When you do have an RSP, that's also another program that we have here in Canada. You have up to $35,000 to put as part of the down payment,
Mm-hmm.
and then you have, I believe, it's 10 years to pay it back.
Mm-hmm.
So it's pretty much taking a loan from yourself to add it to your down payment. There are some other programs that are available in Ontario, and is the first-time home buyer tax credit.
Mm-hmm.
So after you buy your first home,
Mm-hmm.
then you will have on your taxes the following year to file out the form, and then
Mm-hmm.
you will get a tax credit, which is
Oh.
actually very, very helpful for that first year.
Mm-hmm.
Yeah,
It's very good to be aware that there are some programs out there to help you
yeah.
and support you on this big journey, big commitment to get your first home. I mean, uh, I'm on the plan of buying my new first home, and you'll be the person to go to, of course.
Nice, of course.
So I know the feeling. I'm so excited, and hopefully it will manifest soon. So
Yeah,
thank
it
you,
will.
Davis, for
It will
that.
manifest. You will
Thank
see.
you. Thank you. Okay, I know you have a lot of skills and expertise. Addition to securing a good mortgage rate, you also help in like refinancing and property investment. Can you tell us more about this?
Yeah, so I see you mentioned interest rate. When when buying a home, I understand that many people is looking for the best interest rate.
Mm-hmm.
Sometimes the best interest rate is actually not the best.
Mm-hmm.
There are some conditions under that number that we are actually focusing on.
Mm-hmm.
So the bank, for example, might offer you 4.5% or 4.9%. But the conditions are if you're not allowed to pay any extra money
Mm-hmm.
on the mortgage, and if you do, there is a penalty
Mm-hmm.
for you to pay extra money, not even
Mm-hmm.
finish up the mortgage, just to lump some
Mm-hmm.
extra money. Um, Mortgage broker, and that's our job.
Mm-hmm.
We might secure you the best condition for your mortgage.
Mm-hmm.
It might not be that 4.9 or that number that ideally you have in your mind, but the conditions, it will be better.
Mm-hmm.
You will be able to either pay, make extra payments with no penalty, finish out paying your mortgage
Mm-hmm.
with no penalty. It all depends on what is available at that moment.
Mm-hmm.
Um, and then yeah, so sometimes just finding the best rate, it's not everything. yeah, you might be paying off like 0.1, 0.2,
Mm-hmm.
0.3%, but at the end, it will pay it off to pick
Mm-hmm.
a higher interest rate to have that financial freedom at the end that you could be making extra payments without penalties.
Mm-hmm.
Sometimes those penalties could be even $10,000.
Oh, wow.
Yeah, so if you have extra $10,000, you got a bonus at your workplace
Mm-hmm.
and you want to pay it to your house, that might just be just the penalty,
Mm-hmm. Mm-hmm.
right? So at the end of the day, it's not worth it to get into that type of loans.
Mm-hmm. Awesome. So I'm just thinking of like why some people still prefer to go to a bank instead of reaching out to a mortgage broker. What are some misconceptions or risks in people's minds that make them scared of reaching
Hmm.
out to you, for example?
Yeah, so there are some people that they just been dealing with the bank for like so many years that
Uh-huh.
just being financially exposed to someone else, they
Mm-hmm.
don't feel that comfortable,
Mm-hmm.
right? Especially as I was telling you, not many people knows mortgage agents or
Mm-hmm.
brokers
Mm-hmm.
out there as friends. So sometimes it's kind of hard or scary to be exposed financially
Mm-hmm.
to someone. That could be one. Another reason is there is a misconception of, oh, they're dealing with mortgage agents or brokers because they don't have the entire money.
Mm-hmm.
Right now, that's not the case, right? Sometimes I was reading on the news, or yeah, it was actually a news on the newspaper. It says that over 80% of the new deals for major banks are coming from mortgage brokers.
Mm-hmm.
And that's amazing. That's fantastic. Why? Because we still having access to the big banks,
Mm-hmm.
but we might have more options,
Mm-hmm.
or we present more options that at the bank there are not, right? So at the bank they're looking for their own benefits and how to
Mm-hmm.
close on their better terms.
Of course.
For us as a brokers is taking care of the customer and taking care of the lender
Mm-hmm.
as well, right? So that's one of the misconceptions of like
Mm-hmm.
why people is not using that many mortgage agents,
Mm-hmm.
but that's changing very quickly.
I'm glad to hear that people are getting more awareness about the benefits of
Yeah,
working with a mortgage broker and how much money it can save them on the long run because it's such a huge investment.
yeah,
And we all know banks, they just want their own profits, their own money growing.
correct.
But as a mortgage broker, you want your clients' interest at first, while also making sure the lenders are happy. So you're
Mhm.
navigating both people at the same time and having their interest at heart first. So that's very good to know.
Yeah, and there's also something that not many people knows, but mortgage agents and brokers, we have access to many lenders.
Mm-hmm.
So in my case, I have access to 56
Mm-hmm.
lenders. When you go to a bank, they will only offer you one product
Mm-hmm.
or four products
Mm-hmm.
under their umbrella,
Mm-hmm.
right? Let's call it like that. As a mortgage agent, I have 56 to pick and choose what's going to be better for my client.
Mm-hmm.
And I will present different lenders to my client with different conditions, different interest rates to play around and pick and choose from those.
Mm-hmm. That's a very important point because let's say I'm someone who's very busy,
Hmm.
and if I want to compare, maybe I'll go to one bank, another bank,
Yeah,
maximum three. I don't have enough time to. But as you mentioned, as a mortgage broker, you have access to 56
yes, correct.
options, and you can check what are the best rates, best options to save you money,
Yeah,
and it will also save me time and money because I don't have
exactly.
to compare between banks. You can do all of this on
Yeah,
my behalf. So,
yeah. And the biggest thing is if you go bank to bank to bank,
mm-hmm.
they might do a soft credit check on you,
Mm-hmm.
right? When a mortgage agent does, we only need one credit check
Mm-hmm.
because all our lenders take that credit check. So
I
it's
see.
beneficial for you as a client
Mm-hmm.
not to have that many
That
because
will lower the credit
that will
score.
lower the credit
Mm-hmm.
score until you find your ideal rate.
Mm-hmm.
And then for us, it's just one time.
Mm-hmm.
We don't do it until we actually need it. And it's way more
Mm-hmm.
beneficial
Mm-hmm.
for the clients to go to a mortgage broker.
Okay, let's say someone has a good credit score. What do you consider a good mortgage rate? You did mention before banks are asking for 4.5, 4.9%.
Mhm.
What is a good mortgage rate or percent?
Everything depends on like the finances, the down payment as
Mm-hmm.
well,
Mm-hmm.
and the situation that we're like facing. But I will say at this given time, between 4.8, 4.9%, it's an okay rate.
Mm-hmm.
But we also need to take in consideration the underlines,
Mm-hmm.
right? What are the conditions that I'm signing off for?
Mm-hmm. I see. And let's take another case scenario. Let's say I'm someone who doesn't have a good credit score. Will you
Mhm.
be able to still help in this case?
Yes, yeah. So we're able to find lenders that
Mm-hmm.
it could give the money to purchase a
Mm-hmm.
home,
Mm-hmm.
but of course the interest rate will be a little higher,
Mm-hmm.
right? And everything depends on like how damaged is the credit
Mm-hmm.
score
Mm-hmm.
or those conditions as well. There is something that people also don't know. Sometimes we have mistakes on our credit score,
Mm-hmm.
and that's one of the biggest thing I notice as a mortgage broker or agent. We're able to identify those when we're
Mm-hmm.
doing the credit check, and we can tell the client, hey, you should call if you have an explanation why this happens. So Equifax or whoever is the credit the credit report that we're pulling from, to actually fix it.
Mm-hmm.
Sometimes this happened to me once. I was no late with my payment, and somehow it says that I was late for 30 days.
Mm-hmm.
So when I did a credit report when I was moving, that came out, and I'm like, I was never late.
Mm-hmm.
So the bank actually give the statement from that month. They
Mm-hmm.
check the transfer, and everything was fine. So that line got deleted
Mm-hmm.
from my credit score, from my credit report,
Mm-hmm.
and my credit number went up.
Mm-hmm.
Right. So that's actually an amazing tool that we provide to our
Mm-hmm.
clients. That is checking every single line, trying to find an explanation, and if you have how to explain it,
Mm-hmm.
maybe the company will be able to fix it so we can get you a better rate.
Mm-hmm.
So having a bad credit, it's back in the days that they were not get approved. Nowadays we can, but we need to make sure are going to be financially okay at
Mm-hmm.
this given time
Mm-hmm.
to also pay the house.
As you mentioned, like mistakes do happen. Sometimes you find these things on your credit report that are affecting your credit score, but you're paying every month. All is good. Like what's happening, but working with a mortgage agent
Mhm.
can identify these mistakes, and then you can call the credit bureau and discuss the situation. They do investigation, and when you're right, they remove it, and eventually this will help credit score go up,
To work.
and it will make you more eligible for better mortgage rates to be
Correct.
accepted. So that's why you guys have to work with mortgage agents.
Yes.
Okay, so we can wrap it up as a final question.
Mhm.
Is there any tips or anything you feel like we missed you want to also share with the audience?
Yeah. So it doesn't matter that if you want to buy a property or a house, a condo right now. As I was telling you earlier, everything comes with preparation.
Mm-hmm.
So if you're thinking you want to buy a house in like a year or two, get in touch with a mortgage broker right now so we can actually see your finances. Mortgage agents, we don't get paid until we close the deal. So every single conversation that we have is just to work towards that end goal,
Mm-hmm.
right? Build that connection with the client, and then in the future, hopefully that connection is strong enough that we
Mm-hmm.
can actually
Mm-hmm.
make a deal. But we can give you some tips and advice on how during those 2 years, how that year you need to, let's say, behave with your money,
Mm-hmm.
to kind of get you a better rate,
Mm-hmm.
better credit score. And that's the biggest piece of advice I will suggest right now. Get in touch with an agent. It's free of cost,
Mm-hmm.
and let's make your end goal, that is buying a house, closer.
This is a very essential advice.
Yeah.
And again, I want to thank you for your time. It was an absolute pleasure to have you. I'll be sharing his contact details in the description below. And if you like this episode, don't forget to like and subscribe and share it with someone who is looking to buy their first home. And he's based in Toronto. He operates in Ontario. So feel free to reach out to Lewis and take care, everyone. Thank you.
Thank you.